Hello there, I'm Gretel Dixon, a startup advisor at Newcastle University. The startup team supports current students and recent graduates from Newcastle University who want to work for themselves, either by pursuing a portfolio career, working freelance, or by starting their own business. Whether you're looking for grant funding, applying for a loan, getting into an accelerator program, creating a crowdfunding campaign, or seeking investment from a VC, your potential investors will want to know certain financial information. But sometimes it's difficult to know what to include in applications and pitch decks. In this video, I'm going to tell you what kind of financial information investors will expect to see at every stage and give you some tips on how to showcase that. Whomever you're asking for money is your potential investor, and regardless of their relationship with you, they are likely to have some questions about the financials behind your business before they hand over any money. What you need to show them depends on what information you have available at the stage that you're at and who the investor is. But in general terms, what all potential investors are looking for is reassurance that your idea has business potential to make some money in the future and that their money won't just disappear down the drain. Once you realize this, it is a lot easier to put yourself in the shoes of your potential investors and understand what you can do to give them that reassurance that they are looking for. If you're very early on in your journey, haven't built anything yet, and you're just looking to get some funding to get you started, investors will know that you don't have a lot of real information to give to them because you haven't sold anything yet, so they will want to focus on finding out whether you have a good understanding of the business that you're getting into. Get an idea of what budget will be required to start the business and get a sense of how realistic your estimations actually are. To demonstrate this, you could start by showing them your startup costs, which is a breakdown of the money that you will expect to spend before you even launch your business, and should be enough to get you all the way through to your first month post-launch. Investors will also want to know how you plan to make money and how you will spend it, ideally over the first 12 to 24 months after launching your business. Showcasing this is likely to involve breaking down your operating costs, which are the recurring costs of your business, into fixed and variable. Fixed costs are the expenses that are predictable every month with little change. Some examples of this could be paying the rent for your business premises or the salaries of your employees. Variable costs are expenses that change monthly, and they might be related to spikes in production or sales. For example, your marketing costs could be variable if you find that you spend more on advertising in the lead to Christmas than during the rest of the year, or if all of a sudden your product becomes popular and you spend more on production as a result. In early stages, some investors will also expect to see your own personal survival budget, which is the minimum amount of money that you will need to earn to pay your own personal bills, and maybe have a plan on how you're going to cover this whilst the business isn't making any sales yet. Investors will also expect you to have a guess at the amount of sales that you can make on a monthly basis, and this should be based on previous market research that you have done, either through market reports and analyzing your competitors, or through your very own primary market research. And the final piece of this puzzle will be your pricing strategy. Investors will want to know how much you're going to charge for your products or services to assess whether your business has potential to make a profit and grow. We know that when you're just starting, your financials are mainly based on predictions, and this is fine. Investors already know this and understand that you cannot predict the future. However, they still want to see all your guesstimations because that is evidence that you have thought about the financial side of things and done enough research to inform your business plan. And that definitely gives them some reassurance. If you have already made some sales, investors will be interested in seeing some real figures, even if you have limited data. They will want to know whether there is any positive signals or any information that can help you predict growth. To showcase this, you could focus on how many units you have sold and at what price point, highlighting any trends in growing user numbers or revenue, and using these metrics to try to predict when are you likely to break even or generate a profit at your current rates. It is only at this stage that you can start seeing whether your past predictions were realistic or a little bit exaggerated. So this is a good point in time to double check your past forecasts and make sure that your business is still on track based on real performance, as this will be the most attractive thing for investors at this point. If you're even more advanced than that, then it's all about the metrics on the real data. You will be expected to be familiar with and present standard metrics and financial ratios, like the lifetime value of your customers, your customer acquisition cost, and your churn rate. It is also likely that investors will be expecting a full set of financial reports, including a balance sheet, a cash flow forecast, and an income statement. And if you're looking for big investment at this stage, it won't just be about what you present on a pitch. More due diligence is likely to be needed, and you might want to involve your accountant or financial advisors when preparing the information that you will share. Investors know that at certain stages you're working with predictions, and at others you might be overly excited if things are going exceedingly well. However, your financials should never be too exaggerated. I'm not telling you to only show worst-case scenarios, and I think you should always be your own biggest cheerleader. But if you want to maintain credibility, it's better to make sure that your financials paint the most realistic scenario possible. Remember that investors have limited time and are trying to understand as much as they can to make the best possible decision. Make sure that you're giving them all the tools they need to accomplish that fast, but don't overload them with information. When it comes to showcasing your financials, keeping things simple and to the point wins more points than trying to be too fancy or showing every single detail. You are likely to be seeking investment because you have specific needs for the funds that the investors can provide. And when you're asking them to back you, you will do so by telling them the story of the past, present, and future of your business. Make sure that you use that storytelling to engage them by clarifying how their investment will impact on your business. Don't just tell them how you plan to spend the funds. Also show them how their investment will increase your production or reduce your turnaround time. Make a point of how many more sales you can expect to make as a result, or how many more customers you'll be able to service. Take the story full circle and include them in it. And if you want more tips on pitching in general, my colleague Steve has made a full video on the topic, which you can find linked in the description below. And that's all from me today. Thank you very much for watching, and don't forget to get in touch if you have any questions or want to discuss your business ideas. You can contact us via my career, follow us on Facebook, Twitter and Instagram as NCL Startup, or find us online on www.ncl.ac.uk/careers/startup.